Okay.
Okay.
All right, here we go. Let's start. All right, can everybody see my screen?
Yes,
Yes.
sir.
All right. So what this presentation's title is Creating Capital Through Sustainability. So as I mentioned, we are an engineering, procurement, and construction company that specializes in installing solar and storage systems for commercial, industrial, and agricultural applications. So a lot of the question I get from basically a cocktail conversation with people is, what is commercial solar and kind of why should I do it, and what is this grid thing? So in the next 15 minutes, I'm going to attempt to clear up all those questions. So wish me luck. First of all, let's start off with why solar and storage. So 60% of SDG and energy is derived from fossil fuels, which is actually not in the scope of kind of how green energy is nationally, but it still is 60% from fossil fuels. So anything we can do to self-generate through renewables is an improvement on that. So that's an important factor socially. California energy cost is 50% higher than the rest of the country on average. So there's a great economic opportunity for us to deploy solar and create capital through savings. And SDG and energy has the highest cost in the state. We're basically at the end of the pipeline as far as transmission is concerned. So we kind of pay a price for that, and that price is, for commercial watt hour. I'm sure you've seen things much higher residentially on your bill. Probably some of as high as 45 cents, but commercially it's at 25% or 25 cents per kilowatt hour. So to kind of bracket that to give you a sense of, is that a lot or is that a little? It seems like a little, but in Louisiana it's a little under 8 cents a kilowatt hour. Hawaii, it's very expensive, about 28 cents a kilowatt hour. And our next door neighbor, Imperial Valley, through IID, the Imperial Irrigation District, is they charge their customers 12 cents a kilowatt hour. So that's a long way of saying, hey, listen, there's some social benefit as well as some great economic opportunity for us to discuss when we look at commercial and industrial agricultural solar. Energy frequently is the most significant operating cost for a lot of businesses, particularly if you're doing injection molding and things that require heat and pumps and things like that. It gets super expensive. It is an avoidable cost, and it's also subsidized by taxes up to, well, actually over 50% of a system investment can be recaptured through various tax incentives. There's the investment tax credit, which is 26%, and companies amortize it both federally and statewide, and it creates some pretty significant values in terms of, if you pay taxes, this is a good thing. Finally, it is working. We've got over 1.3 million solar installations in the state of California. Now, granted, a lot of these are residential. But overall, it generates 30 gigawatts of energy, which is 20% of California energy needs. So, this is a significant dent, and it's my mission in life to try to improve on that. So the next question is, what is the grid? And this can get real confusing because, in fact, what it is, it's a network within a network within a network. So. Let me try to sort it out a little bit for you here. So the first thing is we've got what are called interconnections, and these are like large regions that essentially what they try to do is create resiliency within that region. So we have the Western Interconnection, which we're a member of, and what it is a bunch of suppliers and transmission lines that, if something goes bad in a particular area, you have some redundancy because you can call on another energy resource, and they can route energy to wherever the need is, what they call the load. It's divided up into kind of three interconnections. You got the Western, which is us, the Eastern, and then of course there's Texas, because as the saying goes, you can always tell a Texan, but you can't tell them much. So they decide they're gonna be their own thing. So and as we saw from last winter, Texas is having some second thoughts about that, because they had a weather event that froze up a lot of their generating capability. It's primarily natural gas, and it caused huge problems. In other words, they didn't have enough resiliency. They couldn't stretch out of their area that was affected by the weather to call in additional resources to help them out. Because believe it or not, it's only the only resources that are available to you are those within that particular region. All right, so that's the interconnection. So that's the first network. The second network is what they call independent system operators, or ISO. So we're a member of the California ISO, and what this is it is a usually by state a wholesaler, and what they do is they manage transmission from the generators to the switch stations. They're responsible for balancing frequency, making sure we have if it were water pressure, you maintain the correct water pressure in the lines, which is 60 megahertz. And their job is to match supply to demand. And they do this through wholesale energy markets, what they call a day ahead pricing. And also they want to make sure that they've got enough, they've basically bought enough energy in order to work through any unforeseen events, should a transmission line go down or something like that. So that's what the ISO does. And then within an ISO, we've got a bunch of utilities. So the utilities, as we know, is SDG, is one of them. We're proud members of that group. There's PG&E and SCE, or what we call the investor-owned utilities. That, in other words, they're large publicly traded companies. There's also a bunch of municipal utilities in Sacramento. There's SMUD, I think, and then there's IID, LADWP. So there's a bunch of metro utilities out there as well. But the big guys are SDG, SCE, and PG&E. So they're responsible for servicing the loads. So they buy energy, usually it's from CAISO, and which is the thing I just talked about, and they distribute that energy to their customer. They own the infrastructure, which is, you probably heard them referred to as, poles and wires company. So that's basically what they do, and it's a very intricate, almost neural network of poles and wires and transformers and switch stations. They're also responsible for regulating voltage, supply, and demand. All right, so there you go. So the last point is, what are energy generators? So we're used to thinking of energy generators like Hoover Dam. It's a huge hydroelectric, or back in the day, the San Onofre nuclear power plant, or the Navajo Apache coal. Back in the day, it's shut down now, but the Navajo Apache coal generator. So these are giant, enormous generators of electricity that basically push energy downhill. Well, what's happened in recent years is we've got a bunch of other guys, particularly solar and coming into the market, and solar and wind coming into the market and doing what they call distributed generation. So what they can do is they can produce energy and export it to the grid. There are rules apply. For example, you and I couldn't go out and buy a lot and do it. It'd be extremely hard, but the rules apply. Energy can be sold to CAISO, or it can be sold to a distant customer within the interchange through a mechanism called a virtual power purchase agreement. Energy can also be sold to utilities. Though SDG&E has gotten out of that business, they decided they didn't like it. you, for example, can sell energy to the grid through putting it on your house and through a mechanism called net metering. So there's a variety of ways that energy generators get their juice onto the grid. So how does solar work? Well, simplistically, there is an array that gathers the sunlight, and then these panels turn it into DC energy, which is the same as like a battery produces DC energy. And it pushes that energy into an inverter, and the inverter flips it to AC, and then also a specific voltage for home. It would be 120 to 40. For a business, it'd be 3-phase 480, and then it pushes it through a meter. And then what happens is, ideally during sunlight hours, the building will self-consume that energy and not have to buy energy off the grid. Now we make these arrays a lot bigger than any building could possibly use. And the reason for that is we push it back through the meter, we make the meter run backwards, and you get a credit for when the sun sets. You can now draw energy off of the grid, but you're essentially using the credits that you built up by pushing the excess energy out to the grid when the sun was shining. So that's kind of it in a nutshell. So the next question I get a lot is, how is how commercial energy rates are charged? I mean, in residential, basically you pay for what you use. You see the little graph they send you that says how many kilowatt hours you use, and this is the rate you charge. So that's pretty much a flat tiered rate, though they are starting to move into the time of use thing. But commercial energy is a little bit different. They charge you not only for what you use, but what you might use, when you use it, and for demand response. So that's one of the reasons that commercial energy gets fairly expensive. So what you use is simply just like in your house, there's so many kilowatt hours you're going to be using, so you get charged for that. Then what uniquely for businesses you're charged for is demand. So what they do is they look at and say, so let's take Solitube. So Solitube, let's say Brian comes in the morning, if Brian's still working there, flips on all the switches at 7:30 in the morning, and there's this tremendous spike because all of a sudden you have all this juice flowing into the systems and firing up machinery, and all the injectors are heating up and all that kind of stuff. That's called a spike. And what the utility companies look for is the highest spike during 15 minutes during an entire billing cycle. So once they see that, they say, that is the maximum use, and we're going to charge people for that. So they put a number on it. It doesn't matter if the rest of the month, for that matter, is much less than that initial spike. You're still going to pay the baggage for having flipped everything on all at once. When you use it, time of use. So as many of you know, that now is that the SDG&E is setting out what they euphemistically refer to as pricing signals, which is to get you to use energy while the sun is shining, because we've got lots and lots of solar. So it's, we want to use energy when the most energy is available. Now, when the sun sets, that resource declines, and they have to start buying energy from other resources, which are fossil fuel resources, and that is more expensive. So they charge you between 4 o'clock in the afternoon and 9 p.m. a lot more for that energy. So that's time of use. And then the demand response is basically, there's, as we know, during times in the summertime when there's just not enough energy to go around. And if you're a commercial customer and using energy during a time period of, reduce your use alerts, then they're gonna charge you a lot of money for that. So that's kind of the fourth thing. So on your bill, what does that look like? So you see at the top there, the actual energy used is like, wow, that's kind of surprisingly cheap. That's not too bad. And the next thing is demand. It's like, oh, wow, that's quite a bit of money there. In this case, it's about $18,000. Time of use, this is a reflection of both what you use and when you use it. And then the final number is demand response, which is fairly modest. In this case, it's a reservation charge. In other words, it's an insurance policy you're buying against events, those reduce your use time events. So that's kind of what it looks like. There's a lot that could be said about that, but that's a 2-week presentation unto itself. So what is the value of solar? So and storage. So if you can imagine, solar is the thing that volumetrically reduces your number of kilowatt hours you use. And storage basically is out there trying to do a workaround on the tariff structures. Like, oh, okay, well, they got demand. Well, what we'll do is we'll store solar energy, and then when there's a demand spike, we'll dump it and shave that peak. Or, there's time of use. What are we going to do? We're going to store energy in the battery, and then when the utility says, hey, okay, it's 4 o'clock, we're going to start charging you more for that energy, the battery says, aha, we're not going to allow that. We're going to discharge the battery. So that's called arbitrage. So the value stack on solar plus storage is essentially tax avoidance, as we mentioned. Half or more of the investment can be paid through tax investment or tax benefit. There's another thing called S-chip, which is a state program that is encouraging people to purchase batteries and then have them grid connected and charged by PV. So they pay up to 25% of the battery cost. The energy cost avoided is very significant. There is a shift in your rates that we can frequently use that is solar friendly. There is the improved value of the building. I mean, clearly if you have 2 buildings and one doesn't have an energy bill and the other one does, it's like, wow, I'd rather have the building that doesn't have an energy bill. So there is improved value, and that's usually the net present value of all the avoided energy costs over the life of the system. You reduce greenhouse gases, which is tremendous for society. And there's other ancillary grid services that, it does friendly things for the grid. So let me give you a kind of a quick example of a project we did in San Marcos a couple of years back. This is Octo Canoco, which is these guys, believe it or not, these guys grow mushrooms in this building. And apparently growing mushrooms is a energy intensive business. I had no idea. I thought they grew in the dark. I don't know. So this was a particularly large system. It was 1 megawatt. It had the energy production of about 1.6 gigawatts of energy in a year. And it saved them about $300,000 a year in energy charges on the system. It reduced their dependence on the grid by 60%. And over a 30-year life of the system, saved them nearly $10 million. So that's pretty much that's a great story. And this is a very similar story that we see in a lot of projects throughout, particularly San Diego Gas and Electric territory. So the next question is, gee, why doesn't everybody do it? This is a fantastic story. Well, there's a couple of reasons. One is that, there's a couple conditions. First of all, you have to have an account with SDG&E. The business owner, it is, let's put it this way, it's easiest if the business owner owns the building. That makes it, a lot smoother. And of course, the business must plan to be in that location for the life of the system. And there are suitable areas on the site for solar. Believe it or not, some companies have their rows very cluttered with equipment, and there's not much room for solar. We can look at carports, but those tend to be quite expensive, and sometimes there's shading problems. And then the last thing is we can always look at ground mount. If you've got lots and lots of space, we can look at putting a ground mount system. So there's some preconditions for those who would be a great candidate for solar. All right, and these projects can be financed. So I mean, they tend to be expensive. Larger projects, can cost $1 million. So you can always buy it by cash. It's the old saying is your best deal is always if you buy cash. If you want an automobile, you're probably going to get your best buy if you buy cash. You can use traditional bank financing, or lines of credit if you've got one with the organization. But most people want to conserve their capital. Capital conservation for businesses tends to be a super important thing because they want to reinvest in that which is going to grow their business. So there's also this leasing. Typically, there's 7-year leases you can get, which is a lease to own, because at the end of the 7-year lease, typically there's a buyout of about 15%, and then you own the system thereafter. So it tends to be something that's very comfortable and familiar for a lot of businesses because they lease equipment, and so this is kind of a logical step. PACE, you believe it or not, the County of San Diego allows you to put a property self-assessment on your tax bill, and that can be converted into a loan, which has a lot of advantages. There's also the traditional power purchase agreement, which is basically where another company owns the system. You allow them to put the system on your roof, and in exchange, you agree to buy the power from that system at a set rate, called 11 cents. So those are the financial options. And here's an example of a project. Well, at the time of this presentation, it was under construction. It's now completed, but this is in Central Valley. It's a 1.8 megawatt ground mount installation for a farmer. I say farmer. They've also they've got a kind of distribution facility with chillers in it, and this is the inverter array that was going with that. So, well, that's it. Hopefully, I kept close to my 15 minutes. If I could, I'll just open it up and see if you have any questions that I might potentially answer.
So, Rex, this is Neil. Great presentation. Thank you. Quick question for you. When you talk about the lifespan of the system, what is the functional life of a monocrystalline cell today?
It's pretty much unknown, though the companies will warranty the module for 25 years. All our cash flow projections are projected on 30 years. There is what's called, that as it gets exposed to sun, it stops working less well, and that's called degradation. So there is a 0.5% per year degradation on most panels, and so at the end of 30 years, you're only getting, you're only getting 80% of the energy production that you got in year one. So they last a long time. Inverters, which is the thing that converts the juice from the panels into AC, they tend to have a 10 to 12 10 to 12 year life expectancy and need to be replaced.
Great, thank you.
Rex, this is Simon. I mirror Neil. That's a great presentation. As you may recall from the introductions, I'm a big fan of electric cars. I'm assuming the storage you're advocating is lithium-ion batteries. So my question for you is, what experience, if any, do you have as far as the lifespan of the lithium-ion batteries and the storage packages you sell?
Right. With lithium-ion, they've got a lot of it depends on cycling. So just generally speaking, the way they typically work in most systems, they've got about a 10-year life expectancy, after which you've got to refresh the batteries. Usually the batteries will pay for themselves in about 2 to 3 years, and then you get 7 years worth of benefit out of them. It's about 10,000 cycles.
So the numbers you were projecting were based on replacing the batteries every 10 years then, or is that?
Yes, correct.
Okay, all right, thank you.
I have a question with regard to, has anything been done with solar energy with regard to harvesting humidity, atmospheric water? Water is another big cost. Humidifiers, that kind of thing, where water is collected to use for the facility.
You know, I haven't seen anything, you know, there's some unusual technologies out there. I haven't seen that particular application. I mean, conceivably, if you're doing something like a carport or something like that, you could put a, you know, rain collection device on it or something along those lines. I have seen where they've tried to use water to cool the panels in order to generate more energy, because solar panels like it to be super cold. So the joke is, if you put a solar system at the top of Mount Everest, because it likes cold and very low atmospheric obstructions, you'd have a highly efficient system. But I've seen where they do that, and then they use the water that is cooling the panels to as hot water.
Yeah, thanks. Excellent presentation.
So Rex, in today's sustainable mindset, or with today's sustainable mindset within the design community, if we're talking about, I mean, do you see a lot of projects now where people are aiming for net zero or net positive systems?
You know, I mean, some of the larger corporations, you know, particularly the ones that are based in Europe, will have a corporate policy to try to achieve that. Those tend to be, you know, larger, fairly sophisticated organizations that will actually have sustainability managers. You know, they're kind of, you know, they try, basically they're trying to lean green their processes down. You know,
Right.
It's not, you know, it's kind of funny. It's you know, mid-sized businesses. I mean, let's face it, they're just, you know, how do I survive? You know?
Okay. So net zero is not a common part of your process then.
Yeah, I would think it will become more common if they regulate it into you know, regulate it in.
Yeah.
But it's not something people voluntarily do. You know, I mean, it's I mean, they like the idea of solar, and if you can show them the economic benefit, then it's like, okay, it's a win-win. But you know, if the economics aren't there, they're not going to do social investing. Let's put it that way.
Okay. Okay. Thank you.
Gosh, I thought I'd have a lot more questions about the grid. I must have done a good job.
You did. Thank you so much for presenting this, and this will live on the Chamber's website. So if you'd like to share it with people in the future, we're going to put it up on the website. Thank you very much, and your contact information is here so we can contact you, Rex. Thank you.
All right, Marcy, thank you very much.
Thank you.
All right, now I got to unshare this, right, somehow. So, all right, here we go.